Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be talking about Square stock. This is a stock that I own in my portfolio, and it's one of the more intriguing stocks to look at in terms of any sort of fundamental valuation, right? Square trades at valuations that are much higher than their peers, but for many years now, 2 or 3 years now, it has outperformed the fundamentals substantially, and the business has grown quite a bit in that time. So I guess in some ways you could say Square is a bit of a bear beater. There's always doubters out there. I used to be one of them going back into 2019 and 2020. As you know, I'm a big holder of PayPal. I really believe in what PayPal is doing. But I eventually came to the conclusion on Square, like, hey, if you're big on PayPal and FinTech and Venmo and all those things, why would you not at least own some Square? So eventually I turned around and bought some Square, made it an addition to my portfolio, and I will be a long-term shareholder. But in terms of today, we're going to be talking about where the valuation sits today, what's projected in the future, and do I think you should buy Square stock as a new investor at its current price of about $203? Reminder as always that my stock picks and projections are just my opinion for your entertainment. But if you enjoy stock market analysis like this, going deep on stocks like Square, getting my honest opinion on the valuations of stocks, please subscribe to the channel, give this video a like, really helps me out. Thank you very much. All right, so I think the bear case for Square is pretty obvious. It's really just about valuation. There's not a lot going against this company when you look at the basics on revenue. Revenue's growing fast. We don't have the pandemic closures of restaurants and stuff to worry about as much anymore. So one aspect of Square, their partner payments platform, which can be used by small businesses to do really everything from point of sale, payroll, taxes. That was Square's sort of original business, and the concerns that we would have had for them last year have kind of evaporated as we've started to open the country back up. Now, what's amazing about Square is on the other side of their business, they have this Cash App, which allows people to send payments to each other. They have crypto investing in there, building really a sort of super app, super fintech app, if you will, for the average person, and probably caters a little bit to the average unbanked person, which skews demographically much younger, things like that. So while Square's merchant business was struggling mightily during the peak of the pandemic, you had Cash App that just blew up and went crazy. It already had a strong foundation. And then when we got to this space where, you know, if you're unbanked, you needed to have a bank account so that you could receive stimulus payments, tax refunds, all those things. And that's where Cash App really got their momentum. And then you threw in crypto trading, and the fact that crypto trading blew up added even more incentive for people to log into their Cash App. So now they've got this strong user base. Obviously, with PayPal is their primary competitor in that space with Venmo. But it does look like Cash App is leading in terms of downloads and App Store ratings as of right now. Venmo is always going to be a strong competitor. I feel good about their future too, but Cash App is the faster growing of the two. All right, so bear case for Square, valuation, expensive stock. We're going to look at it right now. Bull case, growing amazingly fast across multiple facets of their business, and the fact that the world is getting ready to sort of get back out there. What does that do for their merchant platform? What does that do for Cash App? In my opinion, it seems like much brighter days than we saw last year. All right, taking a look at the stock today, you have a price of $202. This is a one-year chart, so coming in from, you know, low points of pandemic in May, obviously made a huge spike here up to 276 in February when the market as a whole was kind of at its peak. And it's drifted down both on market weakness in tech stocks as well as We've had some flare-ups in the crypto space as some of the value's been lost out of that market. So here we are today at about $202. P ratio trailing 12 months of 283.93. This EPS is non-GAAP. We're just going to have to work with non-GAAP numbers on Square. Normally on this channel, I am doing a combination of non-GAAP and GAAP. I will show you the difference here today. But for calculations on a stock like this that is really sort of a momentum play, most of the coverage you're going to find with Square is on a non-GAAP basis. So I'm not going to swim upstream on it. I'm going to use what everybody else is using to analyze this company. All right, let's look at the historical fundamentals to get a feel for where this one sits. We're looking annually over the past several years. On a forward PE basis, which is most of what we're going to do today, is looking ahead. You're sitting at about 140.85, and that has actually come down from December's forward PE, but it is still higher from prior, call it prior pandemic years, right? So normally the forward PE on a non-GAAP basis is running, let's just call it 75 or so. And you're about double where that is right now. We're seeing that trend with a lot of stocks, but it is important to note PEG ratio at 382. If you go back to normal times, you were below 2, and this is kind of a sweet spot. The closer you get to 1 on PEG ratio, the better. So the fact that this number has doubled is definitely something to watch out for. On the price to sales side though, and this is a real strength for Square because their revenue is growing so quickly, they are right in that 6 to 7 times range that we have seen from them in the past. And while that could be high by normal fundamental standards, these days if you're under 10 on price to sales, particularly on a growth stock, you're doing okay. Quick peek at the balance sheet here. Trailing 12 months revenue of $13 billion, cash on hand of $4 billion, total debt of $4.2 billion. So in my opinion, manageable, but it would be nice to see them continue to average this down a little bit. You have plenty of incoming revenue to service your debt at $13 billion, and this number is only growing faster. So I'm not super concerned about debt loads right now. All right, looking at where analysts think some of the key fundamentals will land. This is our consensus earning estimates for 2021 and 2022. Where they stand right now, you had non-GAAP earnings a year ago of 84 cents. This year projected at 149. We have a high of 240. When we look ahead to 2022, jumps to 209 with a high of 325. So I think with Square, the way that they have sort of outperformed, I'll show you this here. This is the earnings history across the board, and they have really, their low outperformance in the last 4 quarters was 33%. So I would definitely factor in the high estimates, I think, on both of these numbers, only because Square has shown the ability to outperform, at least over the past 4 quarters. That trend could change over time, but I'm getting closer to the high estimates for my calculations, which we'll get into later on. On the revenue side, this is the kind of growth that I was talking about, and I think a lot of this has to do with the merchant program sort of coming back to full strength. So you have 113% revenue growth projected for this year. Last year about 10 billion, this year about 20 billion. Arguably slows as we look into this number, 23 billion for next year. On the same token though, you have analysts coming in with highs of about 34. All right, taking a look at TipRanks to see what the best performing analysts think of Square. We have lots of fresh updates to work with, which is great. Most of these came in 14 days ago, which is aligned with when they released their earnings. And I would say mostly buys. We've got 1, 2, 3 holds, 1 sell. The rest are buys. On the sell side, you got a target of 160. The holds look like they're coming in at about 250 on average. And then the buyers really are looking upside of about $300, which would be, 50 some odd percent from where we are today. All right, let's take a look at Seeking Alpha to see how does Squares stack up in the future when we think about the consensus non-GAAP EPS estimates, okay? And these are the consensus average. So I'm guessing Square will do better than this. But if we got to fiscal period ending in December 2021, which is essentially this fiscal year, so if the EPS hits at 152 and we have our current price today of about $203, your forward PE would be at 135. If we look ahead 2 years and the analysts are correct at 212, your forward PE dips under 100. By 2023, you get closer to a $3 non-GAAP EPS. That brings your forward PE down to 69. I happen to think that Square's 295 estimate will probably be pulled up a year just by the way that they're growing. So I would argue that the kind of 1.5 to 2 year forward PE right now is sitting in the 70 mark. Now, on the revenue side, if they hit the revenue estimates, you can see how forward price to sales look. You're 456, 410, 365. Remember, a lot of what Square was doing historically has been under 4. So it's definitely riding hot compared to what we saw pre-pandemic. And that's, I think, the one caution that I'm going to say about Square as we move into my projections is that, quite frankly, at $203, it is running hotter than some of the prices that have been available to other investors in prior years. So just be careful when you jump in. One quick note for fundamental investors, if you prefer GAAP EPS reporting, which traditionally I do, it just was very hard to try to come up with something in Square's world because they're growing so fast. You can find the GAAP EPS numbers online. This site is called MarketBeat and it posts non-GAAP versus reported. And you can see the discrepancy, and this is not just something for Square, it's something you get a lot of. Non-GAAP for the first quarter, 32 cents. Actual GAAP was, minus 41 cents. So there's definitely a difference between non-GAAP and GAAP, and if you are a traditionalist who would prefer to base it off GAAP earnings, just know that almost every website that I looked at is running on non-GAAP numbers. All right, so plugging some numbers in on my side. Today is May 21st, talking about Square, current price 203, current forward PE at 72, with an EPS projection non-GAAP of $1.49. Our fiscal year is the same as the calendar year. I'm going to go ahead and look out to January 2022 is when I think that this would land. I'm guessing you have a forward PE of about 70, and I think that's very fair. It aligns with the historical forward PEs. So at that time, they're going to be projecting the non-GAAP fiscal year numbers for 2022. I project by that point that they'll be thinking about $3.20, the way that Square is outperforming to date. They'll have to continue their outperformance. But if you take 70 times 320, you land at a price of $224. That target price does offer some upside from today, about 10%, but keep in mind, this is, January 2022 is when I project that would land. All right, so a little bit of upside left in Square, but I have to tell you that right now, if we're looking backwards, of course, the market is always looking ahead, but if you want to run backwards fundamentals on Square, the stock doesn't have it. It just really doesn't. And I could see a total collapse down to $150 in the short term as we enter this summer of market volatility, is kind of what it feels like. So don't be surprised if Square takes some huge lumps. I've already been able to add a few shares here and there under 200, and that's really my target price for adding any more Square in my portfolio. Now, the bottom line for a growth stock like this, it's a long-term hold, and you just have to keep following it. And I would say with Square, you have to believe fundamentally a few things. You have to believe that peer-to-peer payments such as Cash App, Venmo, Zeal, all those things, you have to believe that that market is growing. If you don't, you probably don't believe in a lot of the core proposition that's driving Square right now. You also have to believe that as they continue to build into Cash App, they've added some stuff like Credit Karma, they've added like a music subscription service. If you can't visualize like a super fintech app that would add millions and millions of new users every year, then this is probably not the stock for you, because that's a lot of what's priced into this. I can tell you that from my standpoint, if I had to choose between PayPal or Square and I could only pick one, I would probably pick PayPal at this point in time. But as I told you in the beginning, I've sort of come around on Square, just realizing how bullish I am on fintech, and that's why I own it today. Perhaps just look for some opportunities on market weakness to get in under 200 if you don't have a position yet. All right, guys, so that's my analysis on Square stock looking ahead. Hope you guys enjoyed this. Please give the video a like if you did. We'll see you on the next video.